Hello, my name is Faraja and we are Group 14. I am presenting with Bosch and Vusal and we are presenting about Louis Vuitton. We see that Louis Vuitton is a luxury company that focuses on production of luxury goods. We see that it has different luxury goods like handbags, traveling bags, accessory like earrings, necklaces, clothes, which are luxuries for men, women, and children. We also see that the mission of Louis Vuitton is becoming a world leader in luxury goods. We see that their mission is focused on excellent craftsmanship, innovation, and keeping strong traditions. Even though they do not have the official statement, but their actions speak louder on innovation, craftsmanship, and luxury. And we see that Louis Vuitton vision is to stay as the mainly admired luxury brand in the world, always leading and inspiring customers. We also see that they care more about sustainability, which is a very big thing right now, as people need things that are sustainable, and also them protecting the environment. It inspires the people, and it's also important for the future. We see that Louis Vuitton in 2024 in France, it had slow but steady growth. The inflation fell back to normal levels, which helped people to feel more confident to spend money. Also, we see that tourism grew a lot in Paris, like in the Olympic and Paralympic Games, bringing more visitors and customers to the luxury store. So they had the opportunity to get more people into their stores as the tourism was growing. And we also see that public investment like building new stadiums and train line also helped to support the economy as well. We also see that all these things created a good environment for luxury brands like Louis Vuitton to become more popular and also gaining more money in their company as the customer were increasing. We also see that the company that owned Louis Vuitton showed strong financial results as they increased good profit, kept high margins, and they also had free cash flow to invest in the future. We also see that some of the challenges appeared, like slower demand in Asia and questions about who will lead next. But Louis Vuitton still stayed very strong and well prepared for the coming years. So now I will welcome my colleague Bosch to continue with the strategies and the challenges. Thank you.
Thank you, Faraja. I'm Bosch Meyer. Now let's look deeper into the company's internal situation and strategy. LVMH's business model is based on owning a wide portfolio of brands across different sectors like fashion and leather goods, wines and spirits, perfumes and cosmetics, watches and jewelry, and selective retailing. This large portfolio helps reduce risks because even if one sector slows down, others can support overall growth. Their strategy focuses heavily on creative excellence and strong control of supply chains. LVMH owns much of its production from leather workshops to vineyards, giving it more control over quality and brand image. They also focus on selective geographic expansion, entering cities and countries where tourism is growing and where middle-class incomes are rising. One of their biggest strengths is their powerful brand reputation. Louis Vuitton, Dior, and Dom Perignon are among the most respected names worldwide. The strong branding allows them to maintain premium pricing and high profit margins. Financial strength is another big asset. Even during slow economic periods, LVMH generates high free cash flow, which it can use for dividends, acquisitions, and investment in stores and technology. However, some weaknesses were identified. One major weakness is the company's high exposure to Chinese consumers. About 22% of LVMH's revenue comes from China and related regions like Hong Kong and Macau. If Chinese economic growth slows or political tensions rise, it can impact LVMH's performance heavily. Another weakness is the uncertainty around leadership succession. Bernard Arnault, the longtime CEO, is over 75 years old. While the company changed its rules to allow him to stay until 85, there is no official successor yet, which worries some investors. When we look at external opportunities, LVMH has many. Expanding in emerging markets like India and Saudi Arabia is a major opportunity. Luxury mall space in India, for example, grew by 12% in 2024. The second-hand luxury market is another chance. Consumers, especially younger ones, are showing more interest in pre-owned luxury goods. LVMH is reviewing opportunities like acquiring Chrono24, a second-hand watch marketplace. Sustainability is also becoming an important trend. Customers and investors are paying more attention to environmental and ethical issues. LVMH has an opportunity to lead in this area by adopting stronger traceability and eco-friendly practices. Of course, there are also threats. Macroeconomic slowdowns, currency volatility, and new regulations on supply chain labor conditions are risks that could hurt the company. An example is the Dior subcontractor case in Italy, where poor labor practices were exposed, causing reputational damage. Finally, the PESEL analysis shows that political risks are low in France but higher internationally due to trade tensions. Social trends favor ethical consumption, and technology like AI and augmented reality are reshaping how luxury is sold. Legal rules are getting stricter around privacy and carbon reporting, and environmental expectations are rising fast. Now, my teammate Vusal Iskandarli will present our recommendations and final conclusions.
Thank you, Bosch. I am Vusal Iskandarli. Based on the full analysis, we have a few clear recommendations for LVMH. For their short width, their geography is focused. Right now, they are too dependent on China. Expanding investments in India and Saudi Arabia both helps balance this risk. These countries have fast-growing luxury sectors driven by rising e-commerce and new tourism hubs. Second, the company needs a clear leadership succession plan. Investors will feel more confident if LVMH name and operational alert from within the Arnault family, or sets up a structure where leadership duties are shared between family members and experienced external executive. This will help reduce the governance discount that now affects LVMH's stock price. Third, LVMH should double its efforts on sustainability and supply chain transparency. One way to do this is by using blockchain technology to track products from creation to sale. This will help prove ethical sourcing and meet new consumer demands for transparency. After the due subcontract issue, it is important that LVMH its tourists. Another strong opportunity is to expand digital platforms. For example, their Shopper app already has 25 million monthly users. They should scale this platform to sell not only cosmetics but also fashion and wines. This will allow cross-sellings and increase customer lifetime value without needing high investments in placing stores. This is macroeconomic context. LVMH should take advantage of France's structure, stability of law inflation stable, unemployment, and growing tourism. Even though fiscal deficits are a small concurrent finance quantitation are still favorable. They should continue upgrading their flagship story in tourist hotspots to capture more spending during the Paris Olympics and beyond. In terms of financial management, LiveImage should continue maintaining a strong balance sheet in 2024. Net debt to EBITDA was only 1-2 times, showing very healthy finance leverage. This gives them flexibility to invest it, pay dividends, and also be ready if economic conditions worsen. Finally, LiveImage should monitor global risk carefully. If economic conditions in China, Europe, or the United States change, they must adjust their strategies quickly. For example, by shifting marketing spends or focusing more on domestic tourism rather than international shoppers. In conscience, Louis Vuitton and LiveImage are in strong position thanks to their brand power, financial healthy, and smart strategy. However, the world is changing fast. They must act now to secure leadership, succession, sustainability, protects, and diversify their marketing. By following these steps, they can stay the lead in luxury, continue growing, and meet the new challenges of their field. Thank you very much for listening to our presentation.